All right, good morning. Hope you all good. Hope you're good. Hope you're well. Hope you're fine. Hope all is well on your ends. So we were making a intra-week update from the previous video that was released in the channel. Starting with the dollar index, I noted the fact that I wanted to see us violate a CB, and we did violate this fair value gap, the bearish fair value gap at this point, and the potential of creating a weekly fair value gap, because if price could have stayed lower here, we could have created a weekly CB that price could use next week to fall off. So now that that's been disrespected and price is still rejecting away from this down close candle, I expect us to run to this buy side liquidity, and through that this buy side liquidity, of course, completing the market maker buy model that I was highlighting on the daily chart. So going back down to the daily chart, we see that the CB on the dollar index has been disrespected. So now we could expect it to be used as some measure of support for higher prices. Let's go down another time frame to the 1 hour. On the 1 hour perspective, we can see over there we have a new day opening gap going from Monday to Tuesday. This is during the Asia session. So we found the low of day or support from that new day opening gap, and then continued higher from there. We actually had an SMT divergence between this low and this low. What I mean by SMT, note the fact that this low was not swept. All right, this low made at during Asia at 21 o'clock, and this low here made at 9 a.m. When we decide to compare this to euro dollar, for example, you would notice that we have the same highs. Of course, euro is the opposite of the dollar in this case. So right there we have the same high as there, and then right there we have the same high as there. So notice that on euro dollar we had an SMT, we have an SMT divergence between the two correlated pairs. So this was my indication that we might be able to see, well, higher prices on the dollar and lower prices on euro. So right now we are seeing that show overnight over the Asia session. So I expect a continuation to the downside on euro, on pound, and higher prices on USDCAD. Now that we've gotten the confirmation, the second confirmation I wanted to see was us closing above this high, this swing high right here. I mentioned on my previous video that I would like to see a closure, and we got the closure at that point right there. So now we might see this new day opening gap, this volume imbalance, acts as some measure of support. Of course, we've already tapped into this buy side imbalance, sell side inefficiency, the BC residing here, the bullish fair value gap. You can see prices dipped into it and now rejecting away. So price may come down to this new day opening gap, or may decide to use this new day opening gap to find support for higher prices. So we might see price trade down into this, find the low of day at that level, then continue higher into this buy side liquidity there. Or the second possibility, we might find price trade down into this one, which is the one I was originally looking for, and then see a continuation to the upside from there. But either way, I'm expecting higher prices on the dollar and lower prices on the foreign currencies. So moving on to euro, let's start off with the euro. Since we just highlighted the divergence, we can see that price, this was NFP's high, price was unable to take NFP's high, showing us some signs of weakness, traded lower through the entirety of the London session, starting from the Asia session, traded lower. Then New York, yesterday we traded higher, taking out this high, which I believe was Asia session high. So we took out Asia session high here, while the dollar index couldn't do the same, and the pound couldn't do the same. For comparison's sake, while we're here, let's look at GBPUSD at the same high there. Notice GBPUSD didn't take out the same high. So there was an SMT divergence between pound and euro, and obviously with the dollar index as well. So this gave me the indication that we are likely to now start pushing lower. On euro, going back to the daily time frame to see where we are likely to head to and what might be a stumbling block along the way. Right now we can see that we are rejecting from this this up close candle over there. That's within the massive imbalance right there. So we can expect to see lower prices from here now, where the next swing low that I see on the daily perspective is this swing low. Going through that, we have these relative lows at this bottom, so I'm just gonna go for the low there, and we might obviously go through that until these lows here, but that's more of a longer term perspective. So right now we can expect to see lower prices. The only stumbling block that I see, the only problem here, is the fact that we're trading currently inside of a daily buy side imbalance, sell side inefficiency, or a bullish fair value gap. Okay, let's remove this. We're trading currently inside of a bullish fair value gap, which is known to support higher prices. So I would look out to see how today's candle closes, and if we could close below this fair value gap, because that would give us a stronger confirmation to look for a bounce up and continuation lower throughout the week and probably throughout the month as well. Going back again down to going down to the 4-hour chart, we can see we got our market structure shift. Okay, firstly we got our liquidity swept at that point. Asia session high was swept, and now we got our displacement to the opposite direction. We got our market structure shift by closing below that low and violating this. Well, not yet violated because this candle is still printing right now, but likely to violate this buy side imbalance residing there. So right now, going through all I've gone through now, I'm expecting price to retrace back to this fair value gap, because it's the only fair value gap that we have. So we might find price trading higher into this, then continuing lower. If it doesn't, then this will become a breakaway gap, and we might create a new 4-hour fair value gap at this point, and I'll explain what that means using GBPUSD. So let's move on now to GBPUSD, which I'm also gonna do the data range for, but let's see what the lower time frame is telling us. On GBPUSD, we've obviously gone through the same things. This highlighted area is the daily CB, the same CB that we have that we're looking at. This is the next swing low, that's the next swing low. Going through all that, we have this one right here. So I'm expecting lower prices here again for the same reason. And this one on GBPUSD, we have no stumbling blocks. We don't have any bullish fair value gap that is likely to hold us and push up. So I expect this to be more of a low resistant liquidity run. I don't expect there to be any resistance on its way down. I don't expect anything to slow us down, stop us along the way, or anything like that. So doing the same thing that we did with euro, let's realign this properly. On the 4-hour, you would notice that we created a bearish fair value gap at that point there. We also have this tiny one up here, and you might ask yourself now, which one is price likely going to respect? Well, personally for me, the fact that we closed below this low, even though it's a single candle and not a swing low, on a lower time frame it's likely going to be a swing low. The fact that we closed below this candle's low makes me think that there's no reason for us to come back to this fair value gap, not even to talk about this one. So I don't think we're going to come back to this fair value gap, and I don't think we're going to come back to the higher one. I think, and I want to believe, and I want to see the chart print a lower fair value gap, which is only going to be confirmed in the next 40 minutes. But if it could happen that this ends up being a fair value gap, we could find the high of day within this area, then continuing lower from there. because we have relative equal lows, and that's also a liquidity that could be reached today. So that's my drawn liquidity. That's what I'm expecting. And for other confluence and other things to watch out for, I wanted to draw out the EURUSD data range. For those that don't know how to plot out the EURUSD data range, I'm probably going to link the video on how I did that somewhere up here. So let's get this done. Alright, so we are done sketching out the 60 days low and high, the 40 days high and low, the 20 days high and low. We can see that price opened up at this point, right? So that's our equilibrium for the month, and we see how price went up to run this buy side liquidity, the swing high residing right there. I hope we can all see the swing high right there. We swept the highs, but we failed to close above the high. So the same concept that I just talked about now with the fair value gaps and all, we failed to close above this swing high. So this gave me the indication that we are probably not going to continue higher until or unless we close above this swing high. So the fact that we traded above it during NFP and rejected aggressively, and NFP obviously also statistically creates the high or low of the week, of the month. So I wanted to see this to be the high of the month, and I wanted to see a displacement to the opposite direction now that we've taken liquidity and tapped into a PDRA. So two things already off my list, and also the fact that we are in premium for the month. Anything above the EQ line is a premium, anything below is cheap, so that's our discount. So the fact that we traded above it and now coming down to EQ, if you had sold anywhere here within the Tuesday candle, this would be a great place to be taking some sort of partial profit, because we are now finally back at the equilibrium for the month. Because if you looked at this candle from the monthly perspective, not weekly, monthly, you would notice that now we have this long wick, this long top wick. So we could see us continue lower and finally violate this monthly fair value gap. So the fact that we're almost, well, here it looks like we're almost at where we opened up. We're actually bearish now. We're lower than where we opened up. So this is a good place to take partial, because it might end up coming back again or continuing lower. Obviously we want it to continue lower, and we see reasons why we want that to be the case. So when trading GBPUSD, this is a good place to take partials now and look for a possible retracement for a continuation. Personally, I am looking for a retracement and a continuation, but I'm probably not going to look for that here on GBPUSD, and I'm probably going to pay attention to USDCAD, and I'll give my reasons as well, because we covered USDCAD in the previous video. So let's move on to UCAD. USDCAD, we can see we're just running straight to the upside. So USDCAD, I said yes, I wanted to see bullish price action. Let's actually go back to the 1 hour chart where I framed the idea. So here we closed above this swing high. During NFP, we manipulated lower into a higher time frame PDRA. I believe it was a weekly order block. Let's go back there quickly. I know there's a lot of lipstick on my chart, but we rejected off of this order block, this down close candle at that point, and we stayed inside of the buy side imbalance at that point, the bullish fair value gap. So on the 1 hour, actually started with a 4 hour, but on the 1 hour we got a shift in structure. On the 4 hour we got an order block here with a small fair value gap as well, and I wanted to see us trade down into the fair value gap and continue higher. And one thing interesting actually is that we made the low of the week so far in the 25% of the entire range, because if you remember from the last video, I wanted to see this to be a possible market maker by model, because we can see the initial consolidation there, first stage distribution, second stage distribution, and now or accumulation or distribution, depending on what you want to call it, and now we are distributing higher, so we can consider this to be accumulation. And smart money reversal happens here. We got an SMT at a lower time frame, and now I'm expecting a continuation higher, so that this becomes our smart money reversal. Well, smart money reversals happens here at the lows on a lower time frame. Then this I will consider to be the first stage redistribution, and now whatever retracement we find will be the second stage redistribution, which is the silver bullet. So the market maker by model, I graded it from the range high to the range low. Notice how this fair value gap, this inversion here as well, the BPR basically residing here, was confluenced with the 25% of the entire market maker buy model, and price came, created the low of the week at that point, and then continued running away from there. I was looking at it and paying attention to the 1 hour perspective, and I'm seeing all these 1 hour fair value gaps are being respected. We've got another SMT here, but on the 4 hour, one thing was interesting. I wanted to see if you remember my previous video, I said I didn't like the fact that we disrespected this BC by closing below it. So now I wanted to see if we can re-respect it in a way. And at this point, when this candle closed bullish and created a fair value gap on a 4 hour perspective, we did two things. We violated this newly formed CB. We closed above this newly formed CB, and we opened up a new buy side imbalance or bullish fair value gap. So these two things alone, even though we had not closed above this massive one here yet, even though we had not done that yet, these two were enough for me to say, well, we're likely going to continue higher. And we did exactly that, and we closed above the swing high that I was looking for on the daily perspective, because we had a bearish fair value gap there. If you remember, we had a bearish fair value gap, and I said I didn't like the fact that we were respecting it or showing some sort of respect to it. But now we have completely disrespected it. We've closed well above it. So going back down to the 1 hour chart, how would I frame an entry now if it gives this to us? Obviously, well, one, the 50% is likely going to be a breakaway gap, because we have now closed above this swing high that created a fair value gap. I know my lines are not as thick, so let's try and make it thicker. We've closed above that swing high, I mean the high of the candle, which is technically a swing high as well, and now we can see a respect of this bullish fair value gap. So we might just see a continuation from here. I don't expect this 50% fair value gap to be tagged at all at this point. I wanted to see if it could consolidate the entirety of Asia, then manipulate here during London and continue higher, but with the respect that is showing here, I don't believe it's going to be the case. So I am now going to be diligently watching for this 75% fair value gap. This, as you remember, is our silver bullet. It's our second stage redistribution. It's the fastest move in all the leg of the market maker buy model or sell model. So I will be setting an alert at this point to see if and when we tag into this. If we want an extra confirmation, we could look for a market structure shift and or SMT on a 5 minutes perspective within this fair value gap to take it to these relative equal highs. Of course, this is not the final target. We still have an external range liquidity, and going beyond that, we have the 1.4 level above us, another higher liquidity level there. So yeah, this is what I'm looking for in USDCAD, and I think it's a little more cleaner. Well, it's easier for me to frame an idea here as compared to the rest. We can see now the midnight opening price has opened up there. Of course, it opened up 30 minutes ago, so I'd like to see a displacement into this and then continuation higher. So yeah, that's all I have for now. I don't really have any updates on the indices, so I'm not going to be touching them for now. I don't have an update on oil yet, but I will upload a weekly outlook video or an update video sometime during the week if I do get some sort of information. Note that today we do have Euro bank holidays, so the Euro market might not trade as actively as you might expect, or it might trade actively until the New York session. So just something to keep in mind, but I do expect volatility to be there because of the US dollar. Not major volatility, but directional move. And also keep in mind that we have no news today as well. I believe we do have some orange folder news with some other pair, but I'm not sure which one. So I would say thread lightly, you know, don't over leverage, don't max out your risk, and yeah, good luck and good trading.